Hello world, welcome to Building Black Wall Street. In this video, I'm going to be discussing why most investors should be invested in index funds and why stocks are a better investment and a more profitable investment than real estate. The reason I think most investors should invest in indexes like the S&P 500 is because even though investing isn't rocket science, it is an art, and a lot of people are not going to be able to analyze the financial statements correctly and also have the temperament it takes. Also, people aren't going to be willing to put forth the amount of time it takes to do the research necessary to be able to analyze a specific company. Index funds like the S&P 500 allow you to participate in the stock market without having to worry about doing the research and without having to worry that you're going to lose your capital because you're investing in 500 companies when you get the S&P 500 index, 500 of the biggest companies. So most likely you're so diversified that you're not going to deal with a substantial loss. Your gains aren't going to be as big as you would have gotten had you invested in the most successful company out of the 500, but it's not going to be as bad as if you would have invested in the least successful. And over time, it has shown that the S&P 500 has returned around 10%, I believe, in the last century. So that is a fairly safe way to build a lot of wealth without exposing yourself to too much risk, as long as you're in a position to have your capital in the market for a long amount of time, at least a decade or more. I'm going to quote Warren Buffett from The Oracle Speaks, which is the book I'm showing right now, on why the majority is better off investing in index funds as opposed to buying shares in a company like Apple or IBM or other companies in the market. On page 26 of The Oracle Speaks, under diversification, Mr. Buffett said, if your goal is not to manage money in such a way as to get a significantly better return than the world, then I believe in extreme diversification. So I believe 98 or 99% of people who invest should extensively diversify and not trade. So that leads them to an index fund type of decision with very low costs. All they're going to do is own a part of America, and they have made a decision that owning part of America is worthwhile. And when Mr. Buffett talks about managing money, there's a lot that goes into picking specific companies and reviewing the annual statements, staying abreast on the moves the company is making. And a lot of people are not in a position to properly analyze that for whatever the case may be, where they might not be good with numbers, they might not have the mental disposition. So to still take part in the stock market and also put yourself in a position to get a nice return, an index fund is the best way to go because the fees are less than 1% for most of them. And also you're taking a part in the growth of the 500 largest companies that the S&P represents. And over time, the return has been better than most, if not 99% of hedge funds. As a matter of fact, Mr. Buffett has a bet with a hedge fund manager where over the 10-year period from the financial crisis that Mr. Buffett said the S&P would perform better than the hedge funds the hedge fund manager picked, and so far he's winning last time I checked. And we're talking about individuals that went to Ivy League schools like Harvard and Yale to study about learning how to invest, and the S&P is beating their best performance. So if you want to take part in that without putting yourself or your capital in a risky position, then the S&P is the best way to go, where you can guarantee yourself a 10% annual return for the next couple of decades. This is a Fortune article about the bet I was talking about. It says why Buffett's $1 million bet against hedge funds was a slam dunk. And the date is May 11, 2016. It says the hedge funds have some built-in flaws. Much has been made of Warren Buffett's $1 million bet hatched at the start of 2008 with the money management firm Protégé Partners. Buffett bet on an index fund that invests in the S&P 500. Protégé bet it could pick 5 funds of funds that would do better. After 8 years, as Buffett gloated at his company's recent annual meeting in Omaha, the S&P 500 is killing it. The fund Buffett picked, Vanguard 500 Index Fund Admiral Shares, which invests in the S&P index, is up 65.67%. Protégé's funds of funds, funds that own a portfolio of positions in a range of hedge funds, are up on average a paltry 21%. So I think this is proof that for most people, the best bet for them to secure a substantial return with minimal risk is by just getting that Vanguard 500 Index Fund Admiral. Me, myself, I'm an enterprising investor, so I prefer to buy specific companies that I've done tons of research on, and also I've combed over their annual reports and their financial statements, and I feel I have the mindset to properly evaluate the value of those companies, and also I know the fundamentals, so I can purchase those companies based on me drawing the conclusion I'm purchasing them while they're undervalued or while they're below their intrinsic value. But I don't think it's rocket science. For me personally, it's something I enjoy, but I can see how it would be something very difficult for some people to do. That's why for 98%, I think the best bet is the Vanguard 500 Index Fund, or any index that invests in the S&P 500 as a whole. That way, you're not exposed to too much risk, and you're going to get a nice amount of return. But I'll let you decide whether you're going to be an enterprising investor or you're going to be a passive investor. I wanted to speak on why investing in stocks was more profitable than real estate, but this video went a little longer than I anticipated, so I'll do that for one of the upcoming videos. Stay blessed and stay tuned. Peace.